Welcome back to The Contrarian, everybody. Today I'll be talking about gold revaluation and why this could be an upcoming event that happens well within our lifetimes, if not in the coming few years. And so I'll just kind of take us on a broad overview of the different events in past US history when revaluing the gold standard has been a major event that takes place pretty much out of the blue, although oftentimes there are kind of macro conditions that were indicating that it would happen, kind of like what we're seeing now. But, oftentimes there isn't much of a warning before it happens, although it is a very predictable thing for people who pay attention to macroeconomic type indicators. So nothing's new under the sun. So, governments have always been spending more than they take in. So fiscal responsibility has pretty much always been very much lacking in the US government, and that's very much so present today, spending way more than we bring in with tax revenue, so having to just basically finance the deficit spending with continuing to print more money. And so obviously this all eventually has to come to a head and be fixed somehow, and in the past that has oftentimes taken the form of revaluing the U.S. Treasury's gold in order to basically fix the balance sheet of the Fed and the Treasury. So I thought I would refer to some tweets that Jim Rickards has put out regarding this. Jim is very qualified when it comes to macroeconomics, gold especially, and kind of the role that gold does play in the world, even though it's kind of seen in some circles as being a barbaric relic this day. Jim could not disagree more. So a recent tweet that Jim Rickards put out is, of course, having to do with the debt ceiling and all the fiasco having to do with this right now. Jim Rickards says, DC crying about the debt ceiling. Solutions are unconstitutional or just stupid, i.e. the 1 trillion platinum coin. Treasury could get $500 billion today. Just call the Fed, revalue its gold certificate from $42 to $2,000 an ounce, which is the current market price approximately, and deposit the gain in the Treasury's account. Eisenhower did it in 1953. So Jim Rickards, of course, and a lot of other gold bugs have talked about this quite frequently, how a revaluation in the gold price by the Federal Reserve, by the Treasury, could jump the effective price of gold in US dollars overnight. And gold bugs have been, quick to point this out in past. It's not a new topic at all, but it's definitely not something to brush off either as impossible or, something that we'll never see again, because it very much so could happen again. It has happened in the past a couple of times for the United States. Obviously, other countries have done similar things, not as quite as knowledgeable on that, but when it comes to treasuries and Federal Reserves, central banks, when they get to this situation of being unwilling to negotiate or raise the debt ceiling, or when people are unwilling to purchase more treasuries, like what we're seeing now with foreign central banks really not wanting to buy treasuries as much, you get to a point where something has to be done. Oftentimes it takes the form of revaluing gold, or repricing gold, I should say. Now, of course, during a crisis, the federal government can also make gold illegal to use as money or illegal for private citizens to have. Of course, this happened in 1933. During the Great Depression, FDR made it illegal for private citizens to own gold. Now, it's kind of speculated as to how many people actually went along with that, or just, didn't tell the government about it. Of course, there are people who, just wouldn't go along with something like that, rightly so. But, it has happened in the past where government has confiscated or repurchased private citizens' gold at a current price that they set, and then of course they reprice it after that much higher. In the case of FDR's confiscation, it was about a 70% jump afterwards. So it was definitely trying to take advantage of private citizens, basically pulling in all of the gold that was present all over the United States, and then bringing that into the treasuries holding and then bumping the price afterwards. So, it was maybe not a confiscation is the right word, but it was a repurchasing and then repricing right afterwards. So, as we can see on the historical chart of gold, up until about the 1970s, it was actually still illegal for private citizens to own gold as bullion. Of course, there was jewelry and other things like that, but up until the 70s, we really don't see much price action in gold. And of course, in 1971, when the U.S. Effectively went off of the gold standard, Nixon did that, then you really begin to see gold move in price. And it was then, legalized for private citizens to own. That's when you see the massive bull run during the 1970s, early 1980s that gold had. And so that's when you see most of the price action actually begin to start. But looking back earlier, we can see that there is price action that happens before then. It's mainly these repricings that occur. So we can see in 1933 the repricing that FDR did, going up about 70% at that time. And then when Eisenhower did it, it wasn't as dramatic of a shift in the price, but it was still a repricing of the gold nevertheless. As Jim Rickards has pointed out, we can see that in the price action here as well. So I think bottom line to take away is that a gold repricing oftentimes, it does take place during either a major crisis, major war, depression, major fiscal just irresponsibility, and that eventually coming to a crisis type level. So there's a lot of things that are similar to this day and age, where there's global conflict, perhaps there's definitely a fiscal irresponsibility, and that catching up with the U.S. government. So a gold repricing is not out of the question. If anything, it might be kind of expected. Now, in terms of trying to invest for this, anticipating it, it's probably wise to have a proportion of your portfolio, whatever you feel comfortable, in gold or gold assets. But in terms of actually weighting that as high as you might think, a lot of these gold bugs, Peter Schiff, Jim Rickards, they actually don't have the majority of their portfolio in gold or gold miners or things like that. They actually, still are more bullish on maybe internationally traded stocks or even treasury bonds right now. So, there's other things that they do, talk about, recommend, even though they mainly talk about gold. So maybe a good thing to keep in mind is that they aren't all in on gold either, but they do have a sizable proportion of their portfolios there. So it's a good thing to keep in mind when thinking about all of this. But all of this being said, I hope you guys enjoyed this video taking a look at gold repricing, how it very much so could be a solution that does come up again, that the federal government uses to try to paper over the situation that they're dealing with right now. So all that being said, let me know what you think about all of this in the comment section below. I hope to see all of you again at some point.